Imagine waking up to see Polygon's brand new POL token ripping past $1 while the rest of crypto Twitter is still debating gas fees. A chain incubated by Polygon just promised deep liquidity plus high-yield airdrops. Microtransactions are exploding, devs keep shipping, and Agglayer wants to be the Uber of cross-chain settlement. Yet POL sits at 20 cents, coiling inside a falling wedge that screams accumulation. Stay with me for the full breakdown, the 4 profit targets, and the 1 weekly line that absolutely must hold or the setup dies. Miss this video, and you might miss the breakout of the year. Polygon Labs CEO Mark Boiron just gave Boys Club the elevator pitch on Katana, a DeFi-focused chain birthed inside Polygon's incubator. He highlights deep liquidity, juicy yield, and most important, Katana's design as the first OP-Stack CDK chain connecting straight into Agglayer. His grin is subtle, but the message isn't. It all funnels back to one decentralized exchange, and that liquidity loops value straight to POL stackers. The fuse is burning, hardly anyone's watching. Sandeep Nailwal jumps in next. Agglayer, he says, will be the Uber of cross-chain settlement. You run your own chain, keep the upside, and only pay when users hop between ecosystems, no rent extraction, just pay-as-you-go infra. That model echoes Uber's surge pricing. Frictionless, addictive, and designed for volume. Every hop throws dust into Agglayer's revenue engine, which, according to Polygon's official flowchart, ultimately drips into the pockets of POL stackers. Translation? If cross-chain traffic scales like ride-sharing did, POL becomes the toll booth capturing every fare. Polygon's own account laid it out. Katana graduates from the Agglayer Breakout program alongside Privado ID and Midden. The Katana Foundation pledges roughly 15% of KT tokens for an airdrop to Ethereum-based POL stackers. Staking on Polygon already uses weighted stake. Scott leaked a screenshot showing 19,000 POL staked over 1,554 hours, meaning long-term stackers get outsized allocations. In other words, time in the game beats timing the game. The longer your tokens sit, the fatter your KT slice. While airdrop hunters sharpen their blades, real usage quietly snowballs. Richard Dashboard reveals Polygon owning the microtransactions arena, millions of sub-$100 transfers every day. Another analyst dubs Polygon the Venmo of crypto, clocking $97.8 million in USDC micropayments last month, up 5.7% and cornering 41.5% market share. Geneso pushes it further. Polygon averages 2 million active USDC addresses per month and has dominated that metric 90% of the time since 2023. Stablecoin velocity is the heartbeat of DeFi, and Polygon's pulse is racing. Leon Wademan's scatterplot shows Ethereum still king of dev counts and commits, but Polygon hovers just behind Solana in both axes, an enviable mix of manpower and shipping speed. Sandeep's other post notes 284,000 weekly active wallets on WiFi Map and 224,000 on Moonveil. That's DePIN adoption in real time. Location data connectivity and gaming decentralized apps sucking in users, all settled on Polygon. More devs, more dApps, more transactions, each one a breadcrumb leading back to POL value accrual. Let's analyze the 3-day chart you're seeing on screen. After a brutal 5-month bleed, price finally cracked that yellow downtrend line in April, back-tested flawlessly, then slipped into a descending channel. Classic Wyckoff. Supply exhaustion, drift lower, volume drying up. The VRVP on the left confirms chunky support between 15 and 18 cents, exactly where buyers just reappeared. Now, the magic numbers. First, take profit zone at the 618 Fibonacci extension, 53 cents, offers a tidy 35% slice. TP2 tags the 1.0 level at 76 cents for another 30% bag. TP3 hits the golden 1618 at $1.14. That's 25% of the stack. TP4, the moonshot, sits at the 2618 extension, roughly $1.76. We trim the final 10% there because markets love symmetry and humans love round numbers. The Fibonacci RSI momentum oscillator is curling up from oversold. Painting the same reversal, it flashed the last 2 times POL posted triple-digit rallies. If weekly candles hold above 14 cents, the red dashed line, we stay in the trade. A close below, we aboard. Simple, ruthless, unemotional. Could bears nuke us first? Absolutely. If Bitcoin sneezes or macro shocks rattle risk assets, POL could revisit the January low at 15 cents. Yet, every dip reloads the weighted staking clock, and Katana's airdrop percentage is fixed. Sellers provide entries, stackers harvest time. Agglayer's launch won't wait for your feelings. The question isn't whether Polygon's modular supernets will attract traffic, they already do. The question is whether you're positioned before the next volume spike crunches supply. By the way, if you're staring at staking dashboards wondering which pool pays best or how to automate a liquidity loop, I condensed years of trial and error into an ebook called DeFi Financial Freedom, the Ultimate Beginner's Guide. It walks you through staking, yield farming, airdrop mining, and the link sits in the pinned comment. Grab it for less than the price of 2 lattes, and you'll shave months off your learning curve. Maybe even snag that Katana airdrop with confidence. Polygon's engineers are coding. Agglayer is onboarding chains, micropayments are flooding in, and stackers are quietly compounding weight. Yet POL trades like the market never got the memo. History rewards investors who front-run the obvious. If this breakdown resonated, hammer the like button so YouTube knows you're serious. Drop your price target in the comments. I read and reply every one. And subscribe for the next chart before the crowd wakes up. The screen is about to queue up our previous deep dive on Ethereums. Click it, binge it, and keep leveling up. Until then, stay sharp, stay liquid, and I'll see you on chain. Not financial advice, just one crypto degenerate sharing the map.